Good morning, and welcome back to our channel WhatsUpDebz, where we break down the latest news and trends shaping our world today. We're diving into a major development shaking up the global economy. 16 key U.S. allies, including Japan, the U.K., and Saudi Arabia, are rapidly selling off U.S. Treasuries. This sudden move raises serious concerns about the strength of the U.S. dollar, interest rates, and even America's financial stability. Could this signal the beginning of a new financial crisis? Let's break it all down. Massive sell-off. Who's dumping us treasuries? Fresh data from December 2024 has sent shockwaves through financial markets. Out of the 20 largest foreign holders of U.S. debt, 16 countries have cut back on their holdings. Some of the most significant reductions include the U.K. sold off $44.10 billion Japan, reduced holdings by $27.30 billion Saudi Arabia, pulled back by $15.10 billion India, cut holdings by $14.90 billion China, reduced investments by $9.60 billion Switzerland, decreased by $9.70 billion. These aren't small adjustments. This is a massive exodus from U.S. government bonds, and it's happening at a critical time, right after Donald Trump's victory in the 2024 U.S. presidential election. Why are countries dumping U.S. debt? So why are these nations backing away from U.S. treasuries? There are three major reasons behind this financial shift. 1. Fear of U.S. economic instability. Foreign investors are nervous about Trump's upcoming economic policies. With promises of major tax cuts, increased government spending, and aggressive trade tariffs, there's concern that U.S. debt levels could spiral out of control. If Washington keeps borrowing at record levels, the value of U.S. bonds could decline. Investors don't want to be trapped in a losing game. 2. Rising interest rates. Make us treasuries less attractive? Since interest rates are climbing, older U.S. bonds with lower interest rates are becoming less valuable. Central banks around the world don't want to hold on to assets that are losing value. Instead, they're diversifying their reserves, shifting into gold, the euro, and other safe haven assets. 3. Global de-dollarization. For years, countries have been reducing their reliance on the U.S. dollar. This process is called de-dollarization. Nations like China, Russia, and India have been actively cutting U.S. assets from their portfolios and increasing trade in local currencies. For example, China and Russia are using the yuan and ruble in trade. Saudi Arabia is exploring oil deals in currencies other than the U.S. dollar. The BRICS alliance, Brazil, Russia, India, China, and South Africa, is even discussing a new global reserve currency. All these moves signal a growing shift away from American financial dominance. How this impacts the U.S. economy. So what happens when the world loses confidence in U.S. debt? There are four major risks to watch out for. 1. Higher interest rates for Americans. If foreign investors stop buying U.S. treasuries, the U.S. government has to raise interest rates to attract buyers. This means higher mortgage rates for homeowners, more expensive loans for businesses, higher credit card rates, increasing debt burdens for American families. 2. The U.S. dollar could weaken if demand for U.S. treasuries continues to decline. Confidence in the U.S. dollar itself could also weaken. A weaker dollar would mean more expensive imports, higher prices on everyday goods, less global influence for the U.S. in financial markets. 3. Global markets could dump the dollar. For decades, the U.S. dollar has been the world's dominant reserve currency. But if foreign countries keep moving away from U.S. assets, the dollar's role could shrink significantly over the next decade. This would be a major blow to the U.S., as it relies on dollar dominance to maintain economic power. 4. Stock market volatility. When big financial shifts like this happen, investors panic. If fears of a U.S. financial crisis grow, we could see stock market crashes, more economic uncertainty, less foreign investment in U.S. businesses. What's next? Could this trigger a U.S. financial crisis? The key question now is, will this sell-off continue? If more countries keep reducing their U.S. debt holdings, Washington will be forced to borrow even more at higher interest rates. This could increase the national debt at a dangerous pace. At the same time, if Trump's policies add more uncertainty, we could see an even bigger flight from U.S. assets. The big risk? If faith in the U.S. dollar declines too fast, we could see a full-scale recession, a currency crisis, even stagflation where prices rise but economic growth slows. The bigger picture. Is the U.S. losing its financial superpower status? Historically, global superpowers rise and fall and their currencies follow. Before the US dollar, the British pound was the world's reserve currency, but Britain's financial struggles after World War I and II ended its dominance. Now the US faces similar challenges. Could we be witnessing the slow decline of the US dollar's reign? Here's what's happening in real time. China and Russia are pushing alternative global banking systems to bypass the dollar. The BRICS alliance is working on a new reserve currency. The European Union is strengthening the euro as a global alternative. Central banks worldwide are stocking up on gold instead of US dollars. While the US remains a major economic powerhouse, these shifts suggest its financial dominance is being challenged. Final thoughts. What should we watch for next? In the coming months, here's what to keep an eye on. Will the sell-off of US Treasuries continue? Will Trump's economic policies calm the markets or create more uncertainty? Will other major economies fully pivot away from the dollar? Right now, we're at a critical moment in global finance. If this trend accelerates, it could shake the foundation of the US economy. What do you think? Is the US headed for an economic crash? Let us know in the comments below. Don't forget to like, subscribe, and hit that notification bell for more breaking financial news. Thanks for watching. Subscribe, like, comment, A's. It all helps our channel's ratings. Until next time.